And okay, welcome to the Danna-Gracey Healthcare Provider Liability Insurance Primer webinar today. I'm pleased to present our two presenters. Bill Gompers is based out of the Danna-Gracey Miami office and has experience in the private, public, profit, and not-for-profit healthcare and insurance sectors, having served in senior executive management positions at various medical centers and healthcare organizations. Michelle Bilski heads up our Orlando office and brings tremendous expertise to the team and our customers in the field of medicine and practice management. Last year, in 2015, Michelle was recognized as the Woman of the Year by IHP for outstanding achievement in supporting several local charities. Okay. And just to give you an overview of what you can expect from today, both Bill and Michelle will be providing a breakdown of the basic types of coverage and what you need to know, where the most common gaps and overlaps occur, and how to implement a risk management plan that addresses the specific needs for your healthcare practice or facility. And with that, I'd like to introduce Bill and Michelle.
Hi, everybody. Hope everybody's doing well today. Look at the slide that's up. That most of you in your practices and your facilities don't have a complete, clear understanding of what your insurance coverage is, and how little or how much that you need. And going back to an example in a real life of this is many people's experience in South Florida with Hurricane Andrew. When Hurricane Andrew came through, people had no idea what was in their policy, didn't know how much they were covered, didn't know what it would happen if they were out of their homes, out of their businesses for X amount of time. It took months to sort out. And at that point in time, the adjusters that came in, both from a business standpoint and a personal insurance standpoint, were fairly liberal in their allocation of funds and to help people. Today, the insurance policies, which are actually contracts, are written tighter. Adjusters are more in tune with what should be covered and what shouldn't be covered. So it's really imperative for everybody that has a policy to read it, to know it, and to review it with their insurance professional. I know that Michelle was telling me a couple of days ago about an interesting experience she had with her own insurance, so I had to sort out things. Would you like to share that with everybody, Michelle?
Sure. It kind of goes back into when you have a policy, not just knowing what the coverages are, but also knowing what the exclusions are. So I had a little incident with a neighbor's pit bull, and they had homeowners insurance, but lo and behold, when you look at the policy, dangerous dogs are excluded from the policy, and pit bulls are defined as dangerous dogs. So it's always good to have a professional review your policy, not just to tell you what coverages you do have, because a lot of us already know what we think we have, but what then is excluded out of that policy for those coverages.
Thanks. Michelle, could you walk us through the next slide, please?
Sure. So providers and facilities in healthcare and actually every industry face certain liability risks. Those risks are, in many cases, ones that we know, but then also there's lots of examples and classifications of risk that we don't necessarily know as practice managers, every single risk that might be faced. So what insurance professionals, what we do is we've got experience across so many different facilities and practices that there's some risks that we've seen that maybe a practice manager or facility administrator has not yet seen. So we take a look at those risks, we talk them through, and then go through just basic risk management steps, because the risk can be lessened. there's multiple ways some risks can be insured. Some risks just have to be basically made aware of and loss controlled, safety control, things like that. So we take a look at putting together a liability insurance program that addresses all of the needs and provides peace of mind so that anything that can be addressed is addressed and the facility and the practices is protected from economic loss as possible.
Michelle, do you think that when you sit down, as the advisor to your clients, that just going through the process of examining and looking at the coverage and looking at someone's operations just brings awareness to the clients and just helps them to define what their risks are, even if they're not insuring them?
Absolutely, absolutely. It always helps to have that conversation because there are times when I've been sitting down with a client and they didn't even, until they were talking about their day-to-day practice and things that happen every day, they were not even aware that, wow, wait a second, that actually is an exposure that I have. Let's talk about this. So I think it definitely helps to sit down and just have an extra conversation, an extra set of eyes to talk through what you do on a day-to-day basis.
It's like an aha moment.
Exactly.
Right. Well, today, Michelle and I are going to try to just walk you through the basics in our fashion of when we look at our inventory of insurance that most of our clients have. When you look at it as a amalgamation of people of what most of them have in their initial arsenal of insurance, and that covers your professional liability, which better known as medical malpractice to most of you, workers' comp, regulatory liability insurance, and we all know about all the regulations that we're having, employment practices liability insurance, and we'll go into that in more depth later, your commercial general liability, basically your slip and falls and other things that happen that are not professional liability, cyber liability, which is probably the largest increasing risk that many healthcare facilities are experiencing today. And then last but not least, employee benefits liability insurance. And what I'd like to do is review each of them in a little bit of depth right now, and once we go through them, then see if there's any questions that you all might have. Try to focus in a little bit on the professional liability insurance and looking at it a little more in depth from the facility side of it. It provides coverage for your indemnity and expense exposure for errors and omissions emanating from professional mistakes. I think we all know what the indemnity part of it is, that if a ruling is against or if there's a settlement made against you and in the plaintiff's behalf. The expense protection is it's very important because most of the policies, when you read them closely, if they're in the standard market, will provide virtually unlimited defense. There's no bleeding away of the indemnity part. So if somebody's carrying $250,000 liability insurance on their facility, which is very low, they're usually, if they're under a standard form, still entitled to unlimited defense. Although with that smaller limit, it might make it more advantageous for the carrier and for the client to settle a small nuisance claim. We talk about this insurance being written on admitted or non-admitted paper, standard, non-standard. Admitted paper basically means that the company and its policy form and its components have been reviewed by the state insurance commissioner's office, has been approved, and is covered under the insurance department's law in case the carrier would go under for the first $250,000. Non-admitted or non-standard paper is written on for firms that, although the form and the paper is not approved by the state, the carrier is approved to do business in the state. Many of these carriers write on both admitted and non-admitted paper, and their financial ratings can be as good or sometimes better than some of the admitted paper. Some things to look at in the policies, especially the non-standard ones. It's important that you read the policy and know what you need and go over with your insurance professional, because the non-standard, since the forms themselves of the insurance, which is your contract, are not reviewed and approved by the state, can vary widely. Some of the areas you want to look at is whether incidents and reporting of claims is incident sensitive or triggered with a notice of intent to proceed. If it's incident sensitive, once a facility sees something that happens, they can put the carrier on notice, and it's on their watch. If it's not until a claim is filed, although you may know of an incident, you can't file for that, and it could hinder you from changing carriers or looking at alternatives. You need to look at if the defense limits, like we talked about before, are inside or outside of the limits. If they're inside of the limits, you would have $1 million liability policy. Let's say defense costs are $200,000 or $300,000. It would basically eat away at your indemnity level to $600,000 or $700,000. You want to make sure that all your prior acts are covered that are necessary. You want to know who's covered in your facility, whether you're independent contractors, your ancillary help, your professionals, your semi-professionals, students, anybody coming in your facility that actually touches or has anything to do with patient care. Those are your liability drivers. And just need to make sure that the contracts are reviewed and that you have a true and complete understanding of what's in them. Michelle, could you try to give us some help on commercial general, please?
Sure. I had a quick question on the medical professional. Was there something about drop-down coverage that you had talked to me about, where the facility, their policy, maybe they might have $1 million, but if their underlying physician only has $250,000, that their coverage drops?
Great point. Thanks for bringing that up. Yes, some policies in the body have what's called, Michelle pointed out very clearly, a drop-down provision. And that drop-down provision is basically there and says to protect the insurer from the facility being the deep pocket. And it says that if a physician using the facility has professional liability coverage less than the liability limit that is written for the facility, then the facility's indemnity limit will drop down to be equal to that of the physician. And the example I always give to some people is one of the policies has an unlimited drop down, which basically means if a bare physician is working in your facility and gets sued, and the facility gets sued, that the facility would have no indemnity coverage at all. Thanks, Michelle. Appreciate that.
Absolutely. Okay, so commercial general liability insurance, basically, we've all heard of this. It provides indemnity and expense protection for incidents, including third-party incidents that are arising from negligence and cause bodily injury, property damage, and personal injury, and as a result of something that your business failed to adequately protect the general public for. So included in commercial general liability and what some people miss are things like hired and non-owned auto coverage, which can be put onto that particular policy. One of the things that is an interesting question we get a lot is the general liability and the professional liability, in some instances, can be combined onto one policy and makes sense to put it onto one policy for consistency's sake. For example, I had an incident that happened at one of my insureds where it was a post-surgery, which happens a lot, obviously, in freestanding surgical facilities. The MA went in to help the patient get dressed after the surgery and forgot something outside of the room. MA left the patient standing and walked outside of the room to grab something. The patient fell down, and in that particular instance, then the question is, well, was that medical malpractice? Was that professional liability? Should the MA have stayed in the room or sat the patient back down, since it was post-surgery? And there are very specific protocols for how to prepare a patient to leave a facility after surgery. Or is it general liability because there was a hazard in the room, a slight puddle on the floor, and the patient actually slipped on that puddle and fell? That's what caused the fall. In this particular case, the carriers were two different carriers, and that then creates the carriers pointing the finger at each other. No, I think it is general liability. No, I think it is professional liability. And in an instance like this, it would be better if that particular policy was able to have been written with one carrier so that the carriers can't point the finger at each other. It's just, let's cover the claim, let's get the patient whole again and move on. So there's those types of things that can happen in different settings that when you've been through so many clients as we have, it helps the administrator to have that second set of eyes and say, hey, but what about this? Have we considered this? In many cases, you can't get the same carrier to do both. It just depends on the exposure. But when it can be done, sometimes it's very beneficial to do so. And then, of course, general liability policies also have bells and whistles that can be included, additional extended coverages, so things like that, again, reading the insurance contract always helps, and having a professional who's familiar with the different carriers and the different coverages that are included versus excluded is always beneficial to have that review. Bill, I think you would like to go over, can you pick up on cyber?
Okay. Be glad to. Thank you. Cyber liability, as all of you know, has been a big focus not only in the healthcare community but also in the business community in general. I think we've all seen the hacking that's gone on with regards to large retail stores, credit cards, and information. It's an evolving thing. The healthcare profession has access to some of the most sensitive information that anybody can have, including names, addresses, social security numbers, and credit information. Attacks compromised everybody's valuable and private information. Newest things, and that have come out of a couple places, specifically two hospitals in California, is what's called cyber hostage, and where people are basically attacking your computer system, and it's happening at small and large places, and then something pops up on your screen saying, either we've got you, or call this number, or do this, send this amount of money, and we will unfreeze your system and not destroy your data. Very, very scary thing to happen. And people feel a lot better if they're insured for it, have professionals that can answer these instances and can help them through the process. There's also, we know with cyber that you have multimedia exposure, you have network exposure, you have some regulatory exposure there. You have online risk management resources that you can utilize, cyber barriers, And the key thing is that when you get over the thresholds where you must report them either to the local, state, or federal government, there are things you have to react to. You have to notify the people that might be affected. You might have to put credit monitoring into effect, which could be paid for by the insurance, and you have to go through a notification and follow-up program. And, you know, at the end of the day, some people are saying this might be your largest exposure, even greater than some of the professional liability. And I'd like to talk a little bit to you about regulatory. I mean, healthcare is one of the most regulated industries we have in our country, and rightfully so, at all levels. I think we all know from our local to state to federal that we are regulated from everything from how we clean our floors and the disinfectants we use to how we do our billing, how we do our procedures, and how we basically operate. One of the big things about regulatory is to provide you with expertise and resource when doing things, especially when it gets into the areas of fraud and abuse and billing problems. I'm sure you're all familiar with the Stark regulations that have expanded from a 5-page original regulation to, I believe it's 4 volumes now, about what you can and cannot do and what constitutes fraud. One of the biggest exposures that many practices and a lot of facilities have is what they call whistleblower or quiet-ham. And that's when somebody feels that the organization that they're with, or they know that the organization has, in their opinion, done something against the law, either a billing or a fraud thing, and take it upon themselves to bring the suit against the facility or the organization, up to a point where they can either prove their case, then the federal government takes it over, and any reclaim by the federal government or state government, they'll usually get anywhere between 30 and 40% of the proceeds. And we're talking about millions and millions of dollars. Also, the regulatory insurance will allow you the opportunity to have defense against any of your practitioners, against their defense of board actions or state actions, and also in some cases will help with the regulatory fines and penalties and help pay for shadow audits or practice audits prior to your practice or your facility being audited. So it's a very, very useful thing to do. And as with most of the things that we're talking about today, one of the key components, like we've already been emphasizing, is there's a resource. You can pick up the phone, you can call and get expert advice from people that have seen hundreds and hundreds of these cases. And I think that will cover that. Michelle, would you like to talk about some employee benefits liability insurance?
Sure. So the employee benefits liability insurance covers an insured in the event that a claim arises out of an error or omission in the administration of a benefit plan. So examples of this would be you hire an employee that starts February 1st. You have a 30-day waiting period to enroll into benefits, and your HR person is in charge of enrollment into your benefits. So they get the paperwork done, the employee is signing themselves up as well as their entire family, and the HR person forgets to get that enrollment paperwork to the carrier. The problem there is, in the old days, carriers could backdate. So if your administrative person forgot to turn that paperwork in March 1st, March 15th, they could still turn it in and things could get backdated. April 15th, they still could. Now, because of ACA, we are extremely, extremely limited on and strict on how enrollment has to be done and the dates that it has to be done. So if your administrative person misses that date to get the family covered, then that coverage is paid out of pocket by the employer. for the rest of that year because you can't enroll them late. So this type of insurance covers that that error or omission by not signing the person up timely. The same thing would apply for if you gave them improper advice on a benefit plan that the employer offered, and they did or didn't sign up based on that advice, and then it turns out that they should have signed up. It's very good coverage to have now, especially with the strict regulations and laws surrounding those types of benefit plans that can't be corrected as easily as they were before. Bill, I think if you would take over on the EPLI coverage.
Sure, thanks. EPLI, I think that's the acronym for Employee Practices Liability Insurance. This type of insurance can be usually purchased in either a standalone product or sometimes it's made part of a package that's called management liability package, which could include some D&O coverage, some fraud coverage, some embezzlement coverage, some business practices. Sometimes it's actually a little less expensive to get in the package and standalone. But from the EPLI standpoint, it's important to know it covers your current, your prospective, and your former employees, and the areas in which it helps you with regards to discrimination, harassment, wrongful termination, other charges, is again in helping you guide you through the morass of regulatory work that's involved. In the wrongful termination, there's again a plethora of local, state, and federal laws. Wage and hour, many of these policies cover that, and there's usually separate riders with regard to how much. And this can be a true killer if a terminated employee or unhappy employee starts making wage and hour accusations against them for overtime, for not being allowed to take a lunch, for being paid as a salaried person when they should have been paid as an hourly person, for being exempt when they should not have been exempt, and it goes on and on. Any discrimination we have with either religious, sexual, social, any type of discrimination cases where the Department of Civil Liberties comes in, any sexual harassment, whether real or perceived, happens. And this can also be against third parties, where if a drug rep comes into your office and inappropriately approaches one of your employees or any of those. And of course, the great thing of when you sit down and have a disciplinary session with your employee, if it winds up being a suspension or even a termination, is that many times they'll come back and outside of filing a claim for compensation, they will say that you retaliated against them because they disagreed with something that you said. A couple other areas that you'll have excellent coverage is in protecting you from a whistleblower, like we talked about, quiet TEM thing. You would have a defense on that. Any violations of the Family Medical Acts or other state or local laws of that, and any civil rights violations. Again, it's very important coverage to have, and most of our clients, as of today, especially in the facility side, do have it. With that, let me turn it back over to Wendy.
Great, thank you. So we have just a couple minutes for questions. So I see a few people have typed in a couple questions. One of the first questions is from Mary, and her question is, can physicians on staff of facility be there?
I'll take that, I guess. That's really according to the facility's medical staff bylaws. So the facility can, basically has their medical staff bylaws that they allow people to practice or not to practice in the facility. And in coming to that, to those bylaws, the boards of the facilities will take many things into account. One is what the local requirements are. Another is what's the standard of practice. Another one is what their insurance carriers' requirements are. We talked about the drop-down provisions, and whether the facility cares to be the deep pocket into to any codes. Then they have to take into account the general economics in their community, whether it's important to have this group or this one physician on their staff. And after those considerations, they make it. But the simple answer is, in most instances, Florida, their physicians can be on.
Okay. Can you guys hear me?
Yes, ma'am.
Okay, great. So another question from Eileen is, should my professional liability and general liability be insured by the same company?
Well, yeah, I spoke about that a little bit earlier. So just to clarify that it could be covered by the same company, and in some cases it should be. It really is more of a case-by-case individual basis depending upon what the exposure is, and that's something that we take a look at and try to nail down what is the best way to cover both of those exposures with as much clarity and coverage as possible, depending on what's out there in the marketplace and what's available for that particular practice. So it doesn't necessarily have to be, but in some cases it makes a lot of sense for it to be covered together. So that's something we look at on an individual basis.
Okay, great. I think we have time for one last question. This comes from CJ, and it's, do HIPAA audits include business associate agreement reviews?
Michelle, that's one of your great areas of expertise. I know you're certified in that in HIPAA. Would you take that, please?
Sure. So the HIPAA audits, which are done by the OCR, the Office of Civil Rights, as a federal program, definitely include a review of a business associate agreement, and quite frequently that is one area where some of the facilities or practices have some exposure. It's a matter of deciding who truly fits the definition of a business associate, and in many cases it's things that you don't even think about. So does your shredding company need a business associate agreement? Most of us would agree that's a no-brainer, absolutely, because they have access to the documents that need to be destroyed before they're destroyed. So it's clear that they have access to HIPAA-protected information. However, would you think about your cleaning company? Do you need a business associate agreement with your cleaning company? And the response to that is, it quite frankly depends on whether you're in the building when the cleaning crew comes, whether you're not in the building with the cleaning crew, and if you keep your files locked, or if you don't have physical files and they're all just on the computer. So if a cleaning company comes in at night and your shredding boxes are locked and your file room is locked and all the computers are off and you have to have a password just to get into Windows in your computer, then no, they don't really have exposure to a chart. So you would think, no, I don't need one with them. Whereas if they come in during the day and they're walking around and cleaning and there's access to charts and they can see computers, then you'd say you definitely do. I always err on the side of caution with all of my clients and advise them that for cleaning crews, people who are there on a regular basis that may inadvertently have access to view any kind of PHI, you're better off having them sign a business associate agreement than not having it signed and risk a possible audit issue. Now, keeping in mind that when an audit is done, that as long as there's a culture of compliance, as long as the intent of the practice, they have documentation in place, they do have business associate agreements, they have been updated since 2013 to reflect the new additions to the law, that the fines are more along the lines for willful neglect, for ignoring the law and not attempting to comply with it, versus an oversight that was truly an innocent mistake, for example, not having a business associate agreement with your cleaning crew. That will most likely not generate a fine. However, it will generate them coming back again to make sure that you did get that business associate agreement signed. So it's always in your best interest to have everything done correctly the first time, and if you have a certified compliance officer that can come in and just give you that extra eyeball on exactly what's going on within the practice, that always helps to have that documentation as well if an audit does occur, because then the regulator can see, oh, not only did they do it themselves, but then they also had someone come in and give it the once over too.
All right, great. Well, I think that concludes our time together today. We appreciate you all taking the time to join us and hope you found a lot of value from today's webinar. If you have any questions, you can contact Bill or Michelle directly. Their contact information is up on the screen, and you'll receive a copy of this, and we look forward to talking to you soon. Thank you.
Thank you.
Thank you very much.